Do you want to become wealthy as fast as possible? Be sure to watch this video to learn my 5 extreme wealth hacks. I'm using them right now to create a lifetime of wealth, and I'm going to do it in under 10 years. Frank Thomas here, Wealth Generation Strategies, and I'm glad to be with you again today. I've got a cooker video for you today, and it's all about extreme wealth hacks. Sounds a little extreme, right? Sorry, dad joke. But they really are. These are hacks that I've been using for years, and I'm starting to see things come together, and I want to share them with you. I've kind of held off until I felt that they were reasonable and worked, of course. So extreme wealth hacks that you can do, but believe it or not, they do sound pretty risky or unobtainable, but it's exactly the opposite. In this video, I'm going to show you exactly what I'm doing right now to become independently wealthy. Now, I started this journey many years ago, but I didn't really get serious about it until about 5 years ago. And in that time, I had already saved $170,000. What I'm going to disclose in these wealth hacks is how I'm going to turn that into over $1 million in the next 5 years. Let's look at the first extreme wealth hack, and that is you need to make a plan. Now you'd say to yourself, of course I need to make a plan. You'll be shocked at how many people don't make a plan, especially when it comes to wealth. They just kind of shoot from the hip. You can't do that. Now you got to start by making a plan to start paying yourself first. Now this kind of sounds like silly, but you'd be shocked at how many people, A, don't have a plan, and don't have a plan on how they can pay themselves first. Learning how to diligently pay yourself first is number one important. So, depending on how you set this up and how you'll do it, will determine how much and how long this will all take. In the beginning, I only started by saving I had to save $2,000 to open up the accounts with Questrade. Nowadays, I think the minimum is $200 or $250. So the barrier to entry is much lower, but you still got to save that money. In the beginning, part of my plan was selling stuff so I could raise the capital. And over time, my plan was to put in so much. In the beginning, I could only put a couple $100 a month, but soon that became $500. And soon that became $1,000. And near the end, it was about $3,000 per month. And the more I put in on a monthly basis, the faster things happen. Now you can say to me, Frank, how did you do $3,000 every month? When you get used to doing this and when you start seeing the results, you will bend over backwards to make this work for you, because you can start to see how much faster it will work if you can contribute to it faster. Also, part of my plan was to put my tax returns in. Now, we get a tax return of about $10,000 to $15,000 every year. Those little tax returns, boom, take off. And any other windfall we had went into the long-term savings, because all we wanted to do was save, save, save. And you want to do that too. Now, remember, your plans will change, but you do need a plan. Second extreme wealth hack. Use real estate to your advantage. Now, I'm not asking you to become a real estate mogul, because I'm not. I'm not one. I've used my own property in every situation as an investment. And I might be using a very simplistic way to do things, but you'll see why I do it in a second. Now, let me back up. I used to overspend on the most expensive street, which I couldn't afford. Did you get that? In other words, I was always buying houses that were a little bit out of my reach, and a little too big, a little too glitzy, and I was making one foolish mistake after another. I soon came to this realization that I needed to buy a house that I could put equity into, either sweat equity or something else. And let me tell you what that something else is. I look for an area that might be going through what I call change of use. Now, the area or the home could have a change of use. As I just mentioned, if I can find a home that I can put sweat equity into and really boost the value of the home, and you'd be shocked sometimes how little sweat equity you can put into a home and boost its value dramatically, depending on what it is. But you're always looking for what I like to call change of use. I learned this a long time ago in a real estate course, and I've used this over and over and over again. Change of use is when something will change in the area of your home or your home specifically that will either increase or decrease the value of your home over time. So you have to be careful. In my circumstances, I knew what I wanted to buy in terms of features in our next home. So I looked at all the satellite communities in the different areas around the city that we live near, so I could look for a deal that could also be a change of use. In the community that we eventually bought in, there was a terrible flood in 2013. It caused so much damage, and it made everyone become spooked at purchasing and owning property in this community. Well, the side effect was the price of houses plummeted. But you got to remember something. People have short memories. Since then, a tremendous amount of funds has been injected into this community to mitigate another devastating flood condition. But market opinion takes time to change. That's that mindset I was just talking about. And it could take a good decade for people to start forgetting. When we bought in 2020, I looked for what I felt was the asset test, whether or not this was a good idea or not. I felt the homes in the area that we bought in were still about $100,000 undervalued compared with other communities of the same home and style. And I did see a clear change of use on the go. Because like I said earlier, as time passes, people forget and will start to come back into the community. Now, the asset test I was just talking about is when I start seeing the values of the houses go back up. I was talking to a neighbor about a week ago. They bought their house before the flood. So they've owned this house well over a decade now. And they paid in the 300s for it back then. When the flood came and went, I'm sure he couldn't give his house away. So he just lived in it. Now his house is exceeding the value of what he originally paid for it. In all the different areas of Calgary where I'm located, there has been a raise in value. But this particular community has seen a very strong increase in market value because people are forgetting. So that's a change of use. Now, with this change of use, there is a strong chance that I can glean a 70% increase on what I paid just 4.5 years ago. Did you get that? Just knowing something, having a bit of knowledge makes you dangerous. So get knowledge. That is one of my points, and you'll see it in a minute here. You need to understand what the markets do, all the different investment markets. And because I had that bit of knowledge and I knew that it was a good market to jump into, it was a good home that we bought, it had a lot of value, I could see with a little bit of sweat equity, I could raise its value, which I've done, that I can get a very strong increase in the value on the home. Now, this is pretty sizable. This will give my investment portfolio, when I sell this home, a much needed bump to bring it close to the $450,000 mark. Pretty good bump, eh? But I'm not done yet. Before I give you my next extreme wealth hack that will turn my $450,000 into $1 million, if you're enjoying this video, be sure to give it a like. And if you want to watch more videos from this guy right here, be sure to subscribe. Thanks very much. But let me tell you my next wealth hack. And that, as I alluded just a few minutes ago, is become an educated investor. Regardless of what you invest into, it's important that you take the time to learn how your money works, especially when you're investing. Believe it or not, roughly in Canada, stats suggest that only about half of the people in Canada feel confident enough to even invest their own money. Now, I'm going to tell you a little secret. Nobody will treat your money with the care like you can and should. Don't leave this to anybody else. I really believe and recommend that even if you decide to bring somebody else in to help you out, you need to really, really check them out and make sure that they are on the up and up and they're the right person to help you based upon your risk criteria. And also, you need to start learning all the ways you can invest your money, because there's much more than just the stock market or property or business or whatever. There's dozens of different ways you can increase the value of your money or to create more money. I decided to go down the road of learning all about dividend stocks. Why? I can take dividends on a consistent basis from those investments without concern of the investment's price. I basically don't care whether the market goes up or goes down over time. My dividend should stay pretty consistent in the long run. And because I'm so close to retirement, like within 5 years, that's a really important criteria for me. So what does that mean for me? Well, most financial planners will only give plans based upon 4 to 6% returns on a yearly basis. Now, if you depend on this, you may go broke or die waiting to pull the pin and retire. With the education I've gotten so far, my returns exceed over 16%. Did you get that? Over 16%. Some people say it's impossible. Well, it's not only possible, I'm doing it. I'm actually getting more than 16, but I know I get 16 for sure on a consistent basis. So what's the big difference? Like, why would I care if I get 6% or 16%? Well, this is why I care. At 6%, it'll take 12 years to double the funds I've invested. So if I put 100,000 in, it'll take 12 years to become 200,000. But if I take at 16%, it only takes 4.5 years. So in literally I will double that money at least once, twice, and a bit in that same 12 years. That's why I care. Now let's just take that 450 that I'm going to start with. If I invested at 6% for 5 years, it'll become worth $606,982. Not too bad, but we can do way, way better. Continuing to create a gain after the 5-year mark in dividends of about $35,000 per year. But again, we can do better. The same amount, that 450 invested for the same period of time at 16%. So 5 years will be worth, watch this, $996,213. And it will be gaining at about $146,398 per year. Now, if that doesn't excite you, I don't know. You might be dead. I'm just saying. Because I don't need all that. I can continue to glean, let's say, 100,000 off that fund every year, and all the rest can just continue to build on that fund. Over time, that fund becomes worth a lot of money. Needless to say, though, there's no good reason why I shouldn't be a millionaire in 5 years, especially if I continue to contribute something into my savings on a monthly basis. But part of my plan, back to my plan, is I don't need to. That is just allowing the money to build on itself. Good old compound interest. Now let's look at the fourth extreme wealth hack, and that is learn legal tax avoidance. Now, tax evasion is illegal, regardless of the country you may live in, but tax avoidance is built right into the system if we're willing to take advantage of it, and so few of us do. Now, one of these tax avoidance ideas is the government-based savings accounts. These accounts that your government will sanction. In Canada, the two big ones are the RRSP and the TFSA, Registered Retirement Savings Plan, and the tax-free savings account. Now, they work differently, but they're both tax avoidance accounts. Also, learn other things like if you run your own business, consider income splitting. If you and your spouse work in the same business, it makes sense to split your income. You'll be shocked at how much you can save on a yearly basis in taxation, and again, it's 100% legal. Finally, if you run your own business, I recommend paying yourself through standard payroll tax mechanisms. Now, some people will say, well, why don't you just pay yourself out with dividends? This is why. In Canada, this will allow me to continue to build on my government-based CPP or Canada pension plan for myself and for my wife. And that CPP is going to glean us anywhere from $1,500 to $2,000 a month for the rest of my life when I start collecting it. So that is worthwhile as well. And again, another government-sanctioned benefit. Let's look at the fifth extreme wealth hack, and that's consult with a retirement planner. Though I do recommend that you learn how to invest, I also recommend that you take some time to talk to one or several retirement planners. They should all know the ins and outs on how to get the most from your retirement funds, regardless of your age or when you decide to retire. And also, they'll help show you how to pay the minimum amount of taxes legally. That's really important. For example, I found out that taking my CPP and OAS later than 65 can greatly influence how much I'll receive on a monthly basis and how much I will save in taxes, as well as the length of my fund living beyond me. Wow, very interesting. Needless to say, these are my 5 extreme wealth hacks. To conclude, you can say, Frank, you're really lucky though. You've got this real estate boost helping you out. You'd be right, but if you're investing in many different markets, you too will start to hedge luck on your side. So yes, there is always a little bit of luck involved to make the deal, but the truth of the matter is, you pad your luck by becoming a savvy or an intelligent investor. And I'm going to be the first to say this isn't just completely written yet in the history books, but believe me that following all these extreme wealth hacks, I may very well exceed the goal I got in place right now. What I haven't mentioned is I'm already building lifelong streams of income outside of taking from returns on my personal savings. I truly believe that in the next 5 years, as I learn more, I have an expectation, which is a part of my plan, of creating a solid $20,000 per month wealth stream outside of all my saving efforts. Wait for it. I'll be sure to share with you as this develops in another future video. So if you do want to hear about it, like I said earlier, be sure to subscribe. Finally, if you decide to mimic what I'm doing, you need to watch another video that I recently created called The 4 Stages of Wealth. It's a great video that will show you the 4 stages of wealth, plus its pitfalls that you can fall into that can work against you and keep you broke, and you don't want to do that. Be sure to check out that video. It should be showing up on the screen right now. And thank you so much for joining me today. And hey, start using these extreme wealth hacks so you too can start telling your wealth story. Because baby, I want to hear it. Frank Thomas will talk to you next time. Bye-bye.